Back to the markets. Oil has been driving the market action certainly this year. Crude edging higher this morning. Average Joe Options chief strategist Todd Horwitz is at the CME this morning with more. Todd, good to see you.
Good morning, Maria. Merry Christmas.
And to you. What's your take on the recent rally in oil?
Well, I think, look at they hammered oil down to 35. You had all these bearish calls from the major banks that I think are trying to manipulate the price to think that it's going to go higher. So they forced everybody down into a short position down here. And I think we're getting a natural dead cat bounce off the bottom. Now, I do think that we're going to work higher because if you take a look into oil out into the future, we're already trading in the 40s, mid-40s a year from now. So the formation of oil tells us that the prices are going to go higher. And I think that what we're seeing is just a basic people that got short. They were worried about the dollar, but it's more of a dollar story and a price story, not anything else. I think oil probably has found the bottom and goes higher from here.
All right, so we got $37.54 a barrel right now. Todd, stay with us because Mike, you have some comments on the Saudi element to this.
I do, and Todd, to your point, I think there are a lot of shorts in the market that are really have forced the price lower, and I think you could see them come in and start to cover. But there's an article out this morning about the Saudi budget, and with oil price down here in the mid-30s, they literally can't pay their bills. Do they still have enough power to kind of turn off the spigot and get the price of oil rallying higher, which would lead to short covering, which would lead to kind of a ramp up in the price of oil?
I really don't think that Saudi or any of those or OPEC really has any more power anymore. We produce so much of our own oil here. You've seen the collapse of Brent into WTI. If we go back a year ago, Brent was trading at about an $18 premium to WTI. We are not as affected by what they do anymore, which is why we've seen our own oil prices kind of hold here and see Brent continue to collapse. I think what you're really seeing down here is a market that has become very crowded to the short side, not what happens with Saudi Arabia and over in the Middle East, because you've seen any trouble in the Middle East, we haven't seen that major pop. But I think from a technical standpoint, you've seen markets that have been oversold into a bottom, saying that oil is worthless and we're never going to use it again. And we know the minute it gets a little colder out, the minute something happens, there's going to be a bigger demand for oil. So it's more of a technical story versus a supply-demand story right now.
Right. So do you have a key level, Todd, that, if we get above, you might see some increased short covering and kind of a ramp up in oil?
I think if we get back above 40, I think you'll see a quick run to probably 50. I think the key level I've seen was 40 to 44 are real key numbers. That was where we kind of held on the way down. Mm-hmm. If we break through 40, you'll see a quick run to 44. To get through 44, you're probably going to 50. And it could be quick because we know commodities are like that.
Well, what's the impact, though, of oil at these levels? I mean, Ryan, we talk a lot about the fact that when oil has been one of the biggest areas of job creation since the financial collapse. Now with oil down at these levels, is there going to be a knock-on effect on the broader economy?
Well, you see there's a ton of layoffs going on in the oil and gas industry right now. I mean, for consumers, they've got cheaper gas prices, which is good, is putting a little bit more money in their pockets, but it's not putting so much money in their pockets they can go and start businesses and things like that.
That's right.
Why aren't they spending that money? I have one point just to make here, Maria, real quick.
Yeah, go ahead.
If you go back to the jobs number of 211,000 we had 2 weeks ago, nobody talked about that week that 50,000 people were laid off from Schlumberger and Halliburton, and those 50,000 people make more than the 211,000 people that they added to the job role. So I think there's a lot bigger problem here going forward, whether with these oil prices on here without hiring these people back. So I think that's going to be more of the story.
I think it's a good point, and that's what I was talking about, the fact that, the job story has been in and around energy, okay, whether it's manufacturing or directly related to shale production, that's where the jobs have been. So with oil down at these levels and bankruptcies on the horizon, you have to wonder what that means for job creation. Todd, good to see you. Have a Merry Christmas, my friend, and
Thanks,
and a Happy New Year. We'll see you soon, sir. All right, up next.